The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I want to start out by talking a little bit about Basil Chapman discussing with his last guest just a few minutes ago. The gentleman had a windfall, double windfall profit in a stock that he was in. He was double short, and the stock was down quite a bit. And Basil recommended that he take part of the position off. And I couldn't agree with that any more than anything I believe in this whole business that I do, because it's a business of making money. It's not a business of being right or wrong. And the greedier you get, the more pain you're going to have. That much I pretty much really believe in. And the second thing is diversification. You know, the gentleman has a pretty good sized position, I guess, in this, and the market's down big, which, you know, that's great. And if he wants to hang on, that's his decision. But frankly, you know, it's better when you have a windfall like that is to take some of the money off the table. Larry Williams, most of you know, is a fellow who's been my friend for more than 50 years, and we've been in the commodity business together, you know, going back into the 60s. And Larry has probably the only 100% indicator that I've ever ran into. And that indicator is, it used to be called the telephone indicator. I guess it's the mouse indicator now, but the telephone indicator is whenever you were looking at your calculator to calculate how much money you were making on a trade, the first thing you should do is to don't look at the calculator, go to the telephone and take the position off, because that is your greed kicking in big time. And believe me, folks, if there was ever any indicator that I've ever seen that was spot on, that was it. So whenever you feel that urge about how much money you're making and you start pounding your chest, believe me, there's the Grim Reaper's right behind you with that sickle. So, and the second part of it is the diversification. You know, don't just, you know, tie yourself up in long gold or, you know, long corn or short wheat or whatever it is. Try to diversify yourself into things like foreign currency, euro, you know, the Swiss franc, Japanese yen, whichever one you like to trade. You know, also try to do some interest rate futures like treasury notes and treasury bonds, that type of thing. And the second part that I wanted to mention before I get started in the show is that Andy Heck's having a commodity show. It's $99, which includes a whole lot of free things. But for that much information for only $99 is an absolute steal. Believe me, this information used to be a fortune to get, because we really didn't have much, and now we have some really great stuff. And TFNN offers some wonderful, you know, teaching venues for those of you that are interested in commodities or futures markets. You really ought to take advantage of that, because it's really a good show. He knows the business incredibly well, and you will be certainly, you know, well rewarded for doing that. Okay, the first chart that I posted into the Tiger TV today was the chart of the 10-year Treasury notes. We talked about this on Monday, and we also talked about, on Wednesday, and we talked about it getting just a little bit higher. We're within about 8 or 10 ticks of reaching that level. That would make the short-term rates get down to about 2.3, I believe. They're 2.4 and change right now. Maybe 2.2 is where they're going. The Treasury bonds are right behind them. They need to go up about another 10 or 15 ticks, and it should be completing, you know, a pretty good swing level where we have some major resistance coming in. But the 10-year notes are so very important, because these are the things that they base all of our credit card information on. Our, you know, the rates that we have on credit card, the debts on the 30-year, 20-year, 10-year mortgages and stuff like that. That's the benchmark that they use. The 30-year bond doesn't trade nearly as much. The notes trade about 6 times the volume, I believe, as the bonds, but the bonds are the speculative favorite. Why that is, I'm not sure, but the bonds follow the notes, you know, pretty much together. Lately, the bonds have been leading the notes up, but just 2 days ago, the notes really took off, and that told us we were going to go lower in interest rates and not higher. But we're very close to what I think is a pretty good turn, because we've been up for 5 months now in the notes and the bonds, and we're getting ready to move over to the downside, I think, and seeing higher rates instead of lower rates. So that's one of the things that I wanted to keep an eye on. So the next chart that I want to talk about is, I'm going to go through several of these because I think they're at a point where we really need to watch what they're doing. I mean, we're almost, I'll put the chart for the Treasury bonds up here so you'll be able to see those also, and you'll see that we're right at the 50% retracement of this whole move down, and we need to get just a little bit higher to take us up to the 1.618 expansion of this last move, and that would take us into the 139.12 level. That's only about it's about 14 pips from where we're trading right now. So we got just a little bit more to go. We've had a really strong move these last 5 or 6 days, which is how the market usually takes you up, to the end. So we'll see if that's going to be the case, with the Treasury bonds, and we'll be able to see what's going. Been very bullish on these. Every time the market's backed off, it's either stopped at exactly a 50% or a 61% retracement. Going way back into March, it started when we finished a really nice Gartley down there, and now we are, heading up to what we think is a final correction of this bear market. And believe me, this has been a very bearish bear market, folks. If you'll remember, when we had the market made a huge, well, this really shows it nice. Give me 1 second here. I want to show the long-term pattern on this, because this was one that we were really watching very, very closely. This is really a nice chart showing this Gartley where we are right now on the weekly chart, and it shows we're right up in this area where we've been following it for quite a bit. Now remember, we're having lower highs the last several years, so this is nothing. This being a weekly chart, this is the longest correction that we've had since the bear market began several years ago, up at that 152 level. That doesn't mean this market can't go a lot higher. I'm just saying that the pattern is there. We're having certain things that are telling us that the Gartley ABCD pattern is there, so it appears that we should be ready for at least a correction to the downside. Just being up this many, I think we're up 5 days in a row in the bonds. That in itself would be enough to make them go a little bit lower. Now, I'm going to spend just a few seconds here on the hog market, because I don't trade them anymore because there are just too many other things to trade. But we did have a really nice 3-drive to a top pattern here up into this big run that we had. This is a weekly chart that we'll be looking at here in the hogs, and we're having a pretty good correction now after we had this big run up, which was a really nice 3-drive pattern, had a lot of symmetry. It went back from the high in 2008. We made another high in 2011, and here again 3 years later we made another one at 2000 and in 2014, and they've come off about 16 cents per pound in hogs so far off that high. And whether we come down more or not, remains to be seen. But it looks like we have an ABCD pattern in the hogs that would take them down to almost the par level. They're trading at 114 right now, and they could easily get down to 100. You folks probably don't remember this because this was before I was on TFNN, but about 8 years ago, hogs were trading under the cost of production, around $44 a pound. And that was probably the easiest call you could ever make, was to buy hogs, because there's no way that they're going to produce anymore, and that's exactly what happened. And then, of course, there were some problems with the production along the way, and then increased demand from China, and voila, they tripled in price. So these are the things that make you feel quite happy when you happen to catch one of those. But this is why they're here. They go up and down. That's the main thing of what we're watching when we're looking at this. Now, I want to switch gears here for just a second, because we are watching a really important pattern forming, I believe, in the euro and I wanted to bring this up to your attention because we are very, very close to, I think, a really major bottom in the euro. It's got all the necessary things that you could possibly ask for. We are down. We've made, since the high was made back on May the 8th, we have been down. We've only had 2-day rallies twice. One was for 70 pips, and the other one was for 40 pips. And now what we're coming in, a pip is just a percentage in price is what it means, and it just means that each pip is worth $12.50 in the euro. Now we're looking at the euro trading now at the 136.06 level, and we're trying to look to buy it around the 135.75 area. That's down about $350 from where we are right now. This is the 16th day where we've had lower lows or lower highs, which you have to go back almost a year to see a move similar to that. So we are incredibly oversold, and we're waiting to see if we can get into this sweet spot that we see happening in the euro, just under the 136 level. We went a little bit below 136 last night when we hit 135.85. That was 10 pips from the area where we wanted to be buying. Several people have asked me, because I mentioned this before on the show on Wednesday, was the fact that, is that close enough? I don't have the answer to that. I really don't. I'm just saying I'm waiting for that level. I don't think that the bottom is in, because if that level was the bottom, the market would already be screaming to the upside, and we're not seeing anything like that. We might see a 20-pip rally, which is nothing. So that makes me believe that we have one more swing to the downside. We have some cycle dates that are in there. The 44, a nominal cycle, which means it just repeats once or twice, is a 44-day cycle that comes in early next week on June the 4th. So that could be what it's waiting for, is to get down to that level. But I'm waiting for the price level of the 135.75. That's the one that looks the most interesting to me from a technical standpoint, with everything, lined up, just the way that we would, like to see it when all the technical things come together. As far as the stock market, we're still strong. We've made higher highs today in the cash S&P. We made a higher high in the NASDAQ. We have made, and the S&P futures have not done it as of yet, but the cash has, and it certainly looks like it still wants to go up go a little bit higher. We had some relatively bearish news today in the stock market, with GDP being revised down 1%. And they attributed that to the weather. And of course, the market backed off just a little bit down to a 61% retracement, shook it off, and then it's come back to be up on the day. We got the Dow up about $20, the New York Composite's up about 12, NASDAQ up about 6, the S&P's up 4, and so they're holding their own up in these areas, and it looks like we've got another high level coming in. Okay, we'll take a little break here with the Dow up 21. We still got gold down 4.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we've got a caller from our friend from California. Brent, are you there?
I am, Larry. How are you doing today?
I'm doing okay, my friend. What can I do for you?
I wanted to have you take a look at coffee, if you could, please.
Oh, Brent, can I tell you a story about coffee?
Please.
When I was a little boy, 4 years old, and my grandmother was first talking to me about commodities, and we were talking about the softs versus the hards, and she says, I want to just give you some advice as a young man. I was only 4 years old, just sitting in my high chair, and she said, if you ever have the urge to trade coffee, she said, go over on the couch and lay down until the urge goes away. And I haven't traded coffee in 40 years. The last time I traded it was 1972. I was in 10 contracts. They were limit bid, and I was selling them at the market, limit bid. And, Brent, I got filled limit down. And I had never looked at a coffee contract. I haven't traded a coffee contract or anything. Actually, what happened was I happened to be there at the moment that the market changed. I mean, it had nothing to do with the coffee contract itself, but it went from limit up to limit down. I was filled limit down. The broker came back, and we had squawk boxes at Conti Commodity at this time. I'm spending some time because this really brings a lot of memories back to me. And the broker was on the squawk box, and I was really bitching. I really was, because I had 10 contracts, and that was a difference of $40,000. And I said to the guy, how could you give me that kind of fill? What kind of BS is this? And he says to me, he says, do you want the contracts or not? Is what he said. And I said, okay, I'll take them. And believe me, they didn't trade for 4 days. If I had said no, I would have really been in deep doo-doo. Since that time, buddy, I don't even drink the stuff. So how about something else? Why don't you ask me about oats or something that I have a tiny bit of knowledge about? I have no idea. I know it got to $2.70 or something, or $3 some ridiculous amount, and then it dropped about 80%, I'd heard, but I really don't look at it. I don't trade it. There's too many other things that are fun to trade. This is why people should go and listen to Andy's webinar and, subscribe to his letter and stuff like that, because he covers that kind of stuff, and, I really don't. I basically trade the main things that are in the news all the time, the gold and soybeans and corn and wheat and, oil and stuff like that. So I just don't have an interest in the coffee. I'm sorry for wasting so much time, buddy, but you took me down memory lane.
Oh, no, I always love to hear your stories there. One of my favorites is when you're talking about in your youth, again, was the silver certificates that you redeemed, and that was a great story.
Yeah, I still have some silver certificates that I have for my kids because of just the memories of it, and I have a really nice silver coin and gold coin collection, that I've always accumulated since starting back in the mid-'60s and stuff. So nothing, fabulous or anything, but it's fun, and the kids now that they're older, they really enjoy it. So it's really my grandson being 14, he's never seen some of these coins. Well, of course he couldn't, but when he sees them and he sees the difference in the value of a silver coin versus a clad coin, it's nothing but a piece of clad metal. He realizes Gresham's law, the bad money drives out good, and that's what happened during those years. The coins that had silver disappeared from the market because they had more value than the coin itself. Just like copper. Copper now has more value as a metal than it does as a penny, but no one pays any attention to it.
I won't take much more of your time, Jeff, and hear about the people that found the coffee cans full of gold coins.
Oh, Sarah and I followed that very, very closely because it was out of San Francisco. And, the first thing we said to ourselves, why in the world did they ever open their mouth?
Yeah, exactly. The government was trying to take it, claiming the mint had been something from somebody that worked at the mint back in the 1800s and just whatever. I think they finally got it settled, but that was quite a story.
Is that what happened? It was somebody from the mint took it out, or what?
Oh, they were claiming that. Just the government was trying to get their hands on it, basically.
Sure.
But I'm sure there's no truth to that. They're just trying to get their grubby hands on the money. So, anyway, yes, you're obviously going to talk about gold. I'll listen off there, but I appreciate your time, and I don't drink coffee either, so I just saw they've done about a 0.32 retracement off its that total run that it's done almost to the exact numbers. That's the reason I called about it.
Okay, I look at Starbucks once in a while as a stock, but as far as coffee, I still, every time I even hear the word coffee, the first memory that pops up is that Squawk Box and that trade. I mean, that just, that was just, that was the high day. There were so many things hit that high day. It was in 73, I believe, and it might have been 72, but it was a really wild time. I remember that very much. Okay, we're going to take a little break here. Thanks for calling in, Brent. I appreciate it.
All right. I'll talk to you soon.
You bet. Dow up 18, NASDAQ up 6.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we have a caller from South Carolina. Rudy, are you there?
Yes, I'm here.
What can I do for you, my friend?
Larry, this is Rudy. You probably don't remember me.
I
It's
sure
been several
do,
years.
yes.
How's Dr. Ruth? Is she still living?
No, I'm afraid she's passed away. I'll tell you, I talked to her at least once a week, and then what happened was the phone was disconnected. I couldn't get in touch with her granddaughter, who's a doctor in Indianapolis, and I couldn't get in touch with her daughter-in-law, who I knew the family very well. She had moved somewhere back east, and I just couldn't find anything. I couldn't find anything on the obituaries or anything, so I assume she's passed away. But I mean, every contact that I've had, no one's had any contact with her. So she was 94 just this past month in May here, and so maybe that was it. I don't know. I mean, I talked to her all the time, and all of a sudden it just disappeared. She was in a really nice assisted living place, but I really don't know. So I don't know. What can I do for you, my friend?
What's direction that you looking at? I just found this website this morning. And you've seen your name on there, U.S. bonds.
What? Oh, the direction of bonds? I think the bonds are topping here. I think we're going to see some higher rates over the next few weeks, and then again they might even go a little bit higher. But in this area here, I really believe this is where you have to take a look at them from the short side, is what I think.
Right. Okay. All right. Appreciate it. Glad to hear from you.
Glad to hear from you, Rudy, and have a wonderful year. Okay.
You too. Thank you.
You bet. Okay, folks, we're going to take a look now at some of the agriculturals that we have on our watch list all the time. I did want to mention one more thing about the euro. Long-term, I posted the long-term weekly chart into Tiger TV showing you the euro, because if it breaks much below the 135.50 level, we could see a real cascading move to the downside, much like we saw, in the gold market. And that's what we really don't want to, get involved with that when you have, something that just keeps going lower and lower and lower. What we're going to do now is we're going to take a look at the GLD, because that's the ETF. Is one of the most, I think it is the most popular of all the ETFs, as I recall, and it looks to me like we are getting ready to make a Gartley pattern down here at the 786. That's a number that we're waiting in the gold market. We got about another 3 points, it looks like, to go in the GLD down, and that would take us down about another $40 to $50 in the gold market, getting really close to that 1180 again. And that's what we'll be watching in that. But the GLD looks like it wants to go to the 119 level. We're at 121 right now. There's several patterns that are converging there. Anything below $15, and boy, it's going to be in really big trouble. 115, it will be in really big trouble. But right now it's holding up relatively well. When we take a look at the gold itself, it's a little bit easier to see, because once we broke this triangle to the downside that we've had here, it told us that the market was certainly looking to go to at least to the 618, and we broke through that. Yesterday we had a really long-ranging bar on Tuesday. This is Thursday, so we really, that first day coming back from the holiday, broke really hard at the $30, and now we've continued down, and that gives us a price objective down around 225. About another $30 lower is going to be the 786 retracement, and if that doesn't hold, look out, because then you're going to see gold break below the 1150 area, in my opinion, and we'll continue down. This has been very bearish, ever since we topped in gold, way back in August of 2013. And so, that was the top for 2013, and that was nothing more than a 50% retracement coming off of the high from $1,900 per ounce. So it looks like we're heading towards 1225 in the gold, which will be the equivalent to about, I believe it'll be equivalent to about that 119 level in the GLD. The problem with the GLD, folks, is it's an ETF and it doesn't trade except for market hours, and frankly, that sucks. I mean, that's probably the wrong terminology to use, but that's not a good thing to have happen, because you get, gold could be moving $50 before the market opens, but by the time you get something happening in the gold market, it's really in bad shape. If we take a look at the really long-term picture in gold, it tells us a lot, because you can see what happened is when we made the high up here, we made a beautiful Gartley pattern up at an ABCD pattern back at the 1810 back in September of 2012, and since that time, we've been down quite hard, and now we're trying to hold the 61% retracement level at the 1170 area, and if we don't hold 1170, we're looking at something really serious in gold, where we could give back 70% or more of the whole gain, and that would take gold below the $1,000 per ounce level without too much. So we're coming into a zone where it's going to be very, very interesting here for both gold and silver, because they have, they're both, silver's a precious metal or semi-precious. It's more of industrial than anything else, but it still has all of the characteristics that, speculators like to have. It has good volatility. So we're going to keep an eye on that. We've got the Dow Jones holding up here pretty good, up about 17 on the day. And we've got the S&P up 2.5, the NASDAQ up about 6, so it's holding, relatively well. We've got a caller from Las Vegas, but I believe we're really close to the the time has really gotten away from me. Holy cow! Really moves when you're having fun. Manuel from Las Vegas, are you there?
Yes, I'm here.
What can I do for you, my friend?
Hi, good morning. Thank you so much, though, first of all, for your services. I have your book here in front of me, and you've taught me quite a bit about trading. And my question for you is, during intraday trading, what are your favorite time frames or charts that you see Fibonacci numbers and patterns play out?
Okay, what I do is I start with, I look at the dailies, of course, just to give it a rough idea. I don't really trade daily patterns because I do, but I go down to the 60-minute or 30-minute. 30-minute is a time frame that I really like to, base my patterns on. And then from there I go down to a 15-minute or 5-minute to give me what I think could be the possible best entry. But Manny, I don't sit in front of the machine, my friend. I look at about 12 or 15 things each day. I pick out of those 12 that I see the patterns that look the best to me, and I follow those. There might be 7 or 8 of those 14 things, and from that I will go in and put the orders in on 4 or 5 of them, and usually I'm filled on about 3. And those are the ones that I try to do, for day trading. My position trading that we do for the hedge fund is a little bit different because we do daily charts there, and then we use 60-minute or 30-minute for entry. But for day trading, I primarily use 30-minute and then 15-minute and 5-minute. But don't stand in front of that machine every day. That'll just drive you nuts, and it's not your friend because it's a mirror, and everything that's wrong with you psychologically will be reflected back in that, my friend. It's not a the monitor's not your friend.
Sure, yeah, I found that out myself. So what you do is you actually leave trades preset at night, or I understand the busiest time is...
No, when I get up in the morning, usually around 4:30, 4:30, 5 o'clock, Midwest, 8 o'clock New York time. It takes me about a half an hour because I have a rough idea where things are. And I quickly, I have 42-inch monitors, so I have 8 on one, 6 on the other, and I can quickly look at the patterns and see the ones that are completing, and I go in and pick out those 5 or 6 or 7, whatever they are. Then I go down to a 15-minute time frame to see where the patterns are, how close they are, make sure there's not any, really long-ranging bars or gaps, and then I check to make sure that there's not major economic reports or cattle reports or grain reports, so I don't have to worry about that. And then I put the order in, and then if it's filled, I have the order to be filled, and then at the same time I put the order in, I put an automatic sell stop or buy stop to protect the position. And my trading platform is such that when I put in the order, I have to put in the automatic stop at the same time, or they will not take the order. Okay. So that makes it really, it's a discipline on myself because I know I have a tendency to want to play with it a little bit, and these markets don't like to be played with.
No. But in any case, thank you so much for your time. You taught me a bunch that I would have never had the confidence to get into a business like this one without having read your book.
Wow, that's really nice. I'll be sure to send you that $20 after the show. That's really nice of you to say that, though. That's one of the reasons I do this the reason is because Tom O'Brien has given so much of himself to building such a great trading room here, and the people that are here are just fabulous. I mean, they really are, and that's what makes it so much fun. We're a big family, and a lot of great information and stuff. It's really, really a lot of fun. But thank you for it. Is really very difficult for jewelry, but we'll see if we have some data on it. Yes, we do. Hold on 1 second. We've had a pretty good run in this. In fact, wow, there's been a big run here between the platinum and the gold. The platinum has held up incredibly well and rallied a great deal, whereas the gold has backed off quite a bit. It looks to me like platinum has made a 3-drive to a top pattern here over the past 5 or 6 weeks. Let me get this into the Tiger TV so you folks can see it. I'd be looking to buy this if we got a really good correction of about $50 or about $40 down to 1422 level. That's what I would be looking at, because that would be the 61% retracement off of the April lows, and that's the spot. But we hit right at the high there that we made at $1,500 per ounce in platinum. It really was almost exactly at the 786. So I think platinum has made some type of a top, but we also should look to be a buyer because we've had higher bottoms ever since December, and that's been the best one to buy. You certainly didn't want to be buying, the gold or the silver, but platinum is I don't trade this. I've probably traded it a lot during the when it first became tradable back in the late 70s a little bit, but it's very difficult to own platinum because if you own a platinum bar, it has to be you have to be able to assay it, and it's really tough because they really tack on the fees with it. Whereas with gold and silver, people know exactly where you are, whether it's a coin or stuff like that. They know pretty much where you are. And so if you ever buy gold and silver, you buy it in the form of the coin, either the platinum coin. I believe they have a $50 or $500 platinum coin. They have lots of different kinds of gold coins and silver coins, and buy those because they're easy to find the quality of the silver in them. All you have to do is tap it, with another coin, and you can hear the ring in it. And if you don't hear that ring, you know that coin is not silver, and the tone that you have on silver is different than the tone you have on gold, and the tone that you have on platinum is different. And if you ever have gone to, any of the, if you ever been into Saudi Arabia or some of the Middle Eastern countries and gone to some of these markets that you see in the movies and stuff where they're having all kinds of goods for sale, you'll find the gold and silver dealers there, and the way they assay this stuff is just fabulous because they put it on a little pestle, what would be called like a little tiny tower, and on top they just place the coin, and then they take a little hammer that's either has a silver or gold, and they tap the coin, and they can tell pretty much exactly the content that was in that gold by the ringing of it, and then of course they weigh it, and that gives the value of that piece of silver or gold, whether it's a piece of jewelry or a coin or something like that. They can tell whether it's real or not. So you could probably go on Google and find out more information about that, but that's pretty much what you'd want to be looking at. So anyway, let's go to we have a situation going on today in wheat, and I wanted to bring this up because we are in the farming business. We bought some corn here last week. It's going against us just a little bit, but we put enough emphasis in it that possibly we've got enough time to do it, but that was a perfect trade to do. It might not work, but you still got to do it. And what we're going to do now is we're going to take a look at wheat right now, because we are looking at wheat coming down at a 61% retracement off of the lows we made in January. We're also at a 786 retracement of the low that we made in February. So we've got double lows coming in at that time, and we're also at a 1.618 expansion of the move from April to May. In other words, we went straight up from April to May, completing the butterfly pattern, and we have now made a 1.618 expansion number of that, almost near the exact low that we've hit so far today in wheat. So we want to keep an eye on wheat as we get to 628, and we're around 631 per bushel as we're speaking, right now. So we want to keep that in mind so that we can follow it when we get back on the show come Monday. So we'll be able to look at it. By the way, this is the second to the last day of the month, which makes tomorrow, guess what, boys and girls, the last trading day of the month, and we're in an up month and an up week. There's hardly a possibility we're going to have a reversal until early in the week, would be my guess. Okay, we'll take a little break here.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, I can hear Santa's bells coming down on his sleigh. We're talking about the December corn, also known as Christmas corn in the trade, and we were looking to buy this at the 61% retracement that we hit yesterday. We hit it again today. And so far, it's moving a couple cents in our direction. We basically became a farmer when we're doing this. When you're buying corn, you're buying 5,000 bushels. That's equivalent to about 200 acres. And so without having to buy the plows and the combines and the seed and the land and the labor to go in it and the heartache to worry about the weather, all you have to do is buy this contract, and you own 5,000 bushels of corn into December. Now, here we are coming into the 1st of June. The growing season starts right now. Corn should really be blossoming in about 5 weeks. Comes in around the 4th of July. The old adage is the height of corn should be as high as an elephant's eye around the 4th of July. Whether that'll happen or not, I don't know. All I do know is one thing. I've been trading this stuff for 5 decades, and I've never gone through a year where we have not had at least 1 or 2 crop scares, sometimes as many as 4 or 5, but we'll probably have some hot weather, some cold weather, some wet weather, something to make the corn move quite a bit. What's interesting about this trade that we're putting on here is we're buying corn at the 61% retracement, and we just talked about wheat. Wheat is within a penny or two of the exact 61% retracement from last January. So these are major corrections in bull markets. So we're buying higher bottoms, which is a good thing. We're buying it right into the growing season. I mean, that's another good thing. And we've got a lot of good things going for this. But the best thing we got going is we know we don't have to risk very much because we're putting a stop in there of about 10 cents. And if we're wrong, we know that we'll move on, take our $500 hit, and go on to the next thing that we want to look at. So we're very close here in wheat and corn. Soybeans are much stronger. They have backed off just a very tiny bit after making a high at the 786 retracement. They came down about 5 days and stopped at the 382 retracement, so they're still quite bullish, and they're at an incredibly high price. You know, beans are $14 plus a bushel, and when you compare that to corn, that's really a huge premium because, you know, beans, I don't know if you folks know this or not, but beans have an inelastic demand. In other words, no matter what the price of soybeans happens to be, they have to be used because there's really no substitute for them. So that's something that you want to you know, keep in mind because everybody uses it. It's either, you know, soybean oil, margarine, cattle feed, dog feed, whatever it happens to be. You know, we all use the soybean products. They're everywhere, and we use them quite a bit. So these are the trades that we're watching right now. I do want to mention again about Andy's webinar. I think it's the best $99 you can spend, especially if you're interested in commodities and futures. Andy can really help you. He's got a great deal of experience. He knows it backwards and forwards. He's giving you tremendous value with the webinar, you know, plus his written reports, and, you know, he holds your hand. So if you need help, he's the fellow to look at. So keep in mind that that's something that we want. I wanted to mention a little bit more about the stocks because we are in an up month. Tomorrow's the last day of the month. It's going to be very difficult for the market to reverse on the last day of the month. If it's going to reverse, it's probably not going to do it until probably Monday. I know we have the lunar thing that occurred yesterday, the new moon. Today's the first day after. Tomorrow's the last day of that, which is the 2-day orb, and that's Friday. So when you come in Monday, everything might change a little bit. But right now, I don't think you're going to see very much until next week. That's the way it looks like to me, just looking at the charts and actually listening to Basil because he had a really good, you know, handle on some of the oscillators that he looks at are all still pointing higher. There's no fear in the market at all. The VIX index, you know, basically setting, you know, where it was last January at below 12. So all I can say, folks, is live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.